Hey guys, Boris Schlossberg from BKT. Another good week of trading, another great week of setups and model execution. And I'm going to start with our first trade of the week, Euro Aussie, front of the week 811. We decided to get long the pair, basically for the assumption that European data was going to be better than expected and that Australian data was going to continuously disappoint. We had Australian consumer confidence coming out that night, and we thought it was going to be relatively weak. And here's a good example of why, even though the model that we trades primarily micro data, it keys off the big macro trend. And both times this week, I'm going to show you in the other trade as well, the macro trend was really the thing that rescued us much better than we thought. Here's the Euro Aussie trade on a long-term basis, on a daily basis. As you can see, we came in right over here. Our whole assumption here is to always trade with trend at good prices. So we came in at a very good value zone, still in a very strong uptrend right over here on on the 9th of the 11th, coming in around 68, 88 or 85 or so. And there's a little bit of retrace at the beginning of the night, then the pair strengthens, and then boom, 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 it really starts to appreciate. Kathy pretty much manages it through early Asia. We make 100 points on it really within the first 4 hours. We come in here, make our T1, boom, boom, and cash ourselves out. The only thing that kind of is a little bit frustrating is that we got nicked on the retrace to the downside. Had we had this retrace over here not happen, watch how far this trade goes. It just goes, 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 goes. And on the daily charts, you can see there was almost a $500 trade. But still, it was still a very good trade that we came in. And here was the interesting thing. Our assumption was that we're going to get a stronger Euro run and a weaker Australian run. And in fact, what happened was we just got a much weaker Australian run. And this is one of the reasons why trading crosses can be very profitable. You don't have to be right on both situations. You can be just right on one component of the cross and still make some very good money. Now, the second trade of the week was very interesting because we were basically, let me just actually pull back here. Let's take a look at the daily charts because I want to show you both the Kiwi dollar. This is us trading Kiwi dollar right over here, and the other choice in front of us was Kiwi yen. Bottom line is, right here, here's Kiwi yen. We were very negative New Zealand retail sales Thursday night going into Friday, right? And we had two choices, Kiwi yen or Kiwi dollar. Remember, last week we made a wrong choice in one of the selections. This week we made a right choice for the right reasons. Because here was the thing. Both Kiwi dollar and Kiwi yen, as you can see from this chart, are in a downtrend. They both looked relatively good. They were both in the value zone for us to short. But here was a difference. On Thursday we had hot CPI numbers. And I knew that because of the hot CPI numbers, US bond yields were going to go up. Dollar yen was probably going to remain relatively buoyant. So trading Kiwi yen was much less of an interesting proposition than trading pure Kiwi dollar. And indeed, that was the case, because had we traded Kiwi yen, we would have never made T1, would have never made our money, and the whole thing reversed. Because here's the other thing that actually happened. Let me just go back to Kiwi dollar, as you can see. Here's Kiwi dollar, right? We're coming in right over here. The other thing that happened over here on the Kiwi dollar on the 14th is the following. Okay, here's the Kiwi dollar. We're dead wrong on our macro call, which happens, of course, all the time. We're simply wrong on the retail sales. They come out much better than expected. The thing actually spikes up above it. However, remember, this is the reason why you want to trade trend. There is a big macro theme that was still dominating trade in commodity dollars. And in this particular case, what was happening was that prices of gold had actually dropped below the critical 800 level overnight. So what happened was that while we had a minor reaction to the micro data, the bigger trend was still in our favor to the downside, and I made T1 pretty much at around 2:30 in the morning. It actually drifted all the way down. We could have probably made another 20 points, but I wanted to push the trade, give it a little bit of room. And then, of course, the trade turned around, and we got stopped out at break even for the rest of the trade. And as a matter of fact, the trade actually firmed up as the day progressed, basically because the micro data began to weigh more. But this is the key thing of our model. We trade both technicals and fundamentals. So sometimes when we're wrong on the fundamentals, the technicals will rescue the trade anyways. You want to have every probability in your favor when you want to go into a trade and you want to make good selections. So that's been it. That's the BKT trades for this week. Next week, I am probably going to trade live, and I'm going to trade live an absolutely new version of the 00 setup that made me profits 10 out of 11 times this week So anybody who hasn't signed up, I invite you to join us for BKT Chat, live trading with Boris next week. I'm going to show you a brand new setup that I hope you'll find very interesting. This is Boris Schlossberg for BKT, over and out.